Hello, everyone. I put this video together so we could talk about our trading and our trading account as a business, because that's really what it is, and it's how we need to think about it to take this seriously. Our business is based in cash. We have a focus on cash and how we manage it. So it's not all just about whatever is in our account that particular day. We need to have an approach, going forward, so we could, grow the account, take some out of it, etc., and so that we can continue to be, traders and successful, etc. So we're going to start with, what causes potential businesses to fail, and the most causes for a business to fail is really lack of proper cash flow management, right? So you got poor cash flow management, and you ultimately run out of cash, and that's the definition of a business failure is basically you run out of cash. And in our business, really, everything we do is cash. I know some of you have your own businesses or have run businesses, so you understand about inventory and inventory turns and cash management and payroll. Our business is a little bit more simplistic than that. We just need to focus on our cash management which is basically our trading account. Um, but we also need to have some perspective on short term planning, right? So we're going to talk about short term planning some, and what that means in terms of our accounts, and also some long term planning. We're not going to go into too much in the long term planning. That gets into some other subjects which maybe we'll get into in coming months as the need arises. But first of all, let's talk about very very short term kind of thing. So what we want to do first is we need to protect your initial capital investment in your business, right? So we've talked about this analogy before. You need to be able to walk before you run. You need to be able to run before you sprint. And so to do that, I mean, the trading world gives us ability to do this in simulation where you cannot hurt yourself. And so you should really be trading with simulation money until you are consistently profitable. I understand the temptation to jump into trading, real money, because everybody wants to start making money. And but you need to be cautious about that. You need to make sure you understand what's going on, especially since we have some simple trades, and we have some advanced trading techniques. And those advanced trading techniques you should practice some before you jump in with real money. So that's free, right? I don't think it cost is time, and it's definitely a step that you should go through about trading with simulation until you're consistently profitable. Um, Now, we also want to trade the most conservative trades until you have, backup capital. So fear is one of those things that enters into our mind when we're trading about losing our trading capital or losing the account. And so it's good to have money on the side, and not in your trading account itself, but just on the side somewhere. It doesn't really matter where you have it, as long as it's not in your actual trading account itself. And now we're going to call that backup capital. That's it, just in case something goes wrong, right? You either make a mistake, and or a black swan event could happen in the market, right? We've talked about flash crashes and those sorts of things. Something unexpected. Maybe it happens once a year. Maybe it happens once every 10 years. If we're doing a kind of a conservative kind of a style, I'm not too worried about black swan kind of events, but it does make you rest a little bit easier knowing that you're still in business. Whatever happens in the market, you're still in business if you have a backup capital account. So with our type of returns on our trading accounts, then just having a backup capital account should give you some peace of mind in terms of trading these type of things. We'll talk a little bit more about that, et cetera. Going forward, and because that's an important topic as we continue to build type accounts. So short-term plans. All right. So let's talk about short-term plans. So you need to make sure you're first of all profitable in simulation. No need to beat that horse anymore. But, if you're not profitable in simulation, you should not be, really toying around with real money. So then let's say you have a small trading account, right? So one of the first goals is to turn, make some profit out of your small trading account, and then, trade that into a small capital, backup capital account. And we'll get into sizes and those sorts of things in a second. So first of all, just kind of duplicate those funds, in other words. So if something does happen, you're still in business, right? The next thing you want to do is turn your small trading account into a medium-sized account. That means you can start to take trades a little bit differently than if you just have a small trading account. And then once you have a small trading medium type of account, then you need to have a medium backup account. So you're still in business no matter what happens. No matter what happens, you're still in business. So then you're going to trade the medium account into a large account. And then obviously the next step is to, trade the large account into a large capital, backup capital account. And so you don't have to do this without taking any money. So you can take some funds out during this process, to enjoy, maybe, pay some bills, etc. So it's not just about building, it can be depending on what your own personal situation is, and everybody's is different. So feel free to take it out, but in my opinion I would at least want to achieve a medium account. I feel much more comfortable. Me personally, I would feel much more comfortable with trading a medium account than I would just trying to slug it out, month after month after month, and taking all the profits out of a small account, for instance. So from there, right, the way we're going to achieve that is routinely, every month, every 2 weeks or something like that, we're going to take the profits out of the account and to literally deposit it into a backup capital account. Some of you might say, well, I'll just leave it in there and I'll continue to trade the same way. I just won't trade as a medium account. I'll just to continue to trade as a small account. Well, remember, the other thing that we're trying to protect is from problems that might occur. And I haven't had one of these in years and years and years, but it did happen to me once. And so it's good to have a backup capital account, just in case. And so you're worried. You're not really worried that you're out of business. I mean, you're literally still in business. And so and then then you're going to build it to the next account level, right? And so you're just going to continue that. We'll talk about that a little bit more. And then also short term, you need to plan for taxes. Our trading business is fairly simple in terms of capital gains. The E-mini 500, S&P 500 contracts share qualify for Rule 1256. That's an IRS rule. We get to split short-term, split our gains between short-term and long-term capital gains. Short-term capital gains is whatever your own individual personalized marginal tax rate is, and then long-term capital gains has its own implications as well. But it is favorable compared to just having to take everything as short-term capital gains. The long-term plan, right? And we're not going to talk too much about this, but maybe we will at a future point in time. Right, we can start talking about multiple contract per unit. When I'm running the room, I talk about units. Right, I'm in 1 unit, I'm in 2 units, etc. And that is whatever your multiple contract size is. Right, there's also such a thing as called trader tax status. Again, this is an IRS terminology. And you can qualify as a professional trader with trader tax status. It does require the definition of a large account and a certain amount of activity. So, but it is possible to do that, and it's also completely possible to incorporate your trading as a business, which those of you who have run businesses before realize all the tax saving type of things that you can get into if you have incorporated a business and with the dividends, etc. So again, that's a long. I'm not a professional, but I can point us in the right direction to get those professional inputs on those type of things. But right now I think we're all kind of focused on kind of like the short term plan, and making sure we have our trading foundation built, and we know where we're going from here. So let's talk about account sizes. All right, so account size definitions. In my opinion, $5,000 is a small account. If you have less than $5,000 in your account, then obviously it's less than a small account, and you would need to be even more conservative. $10,000 is a medium-sized account, and we'll talk about in just a moment what all of these means in terms of their trading implications. And finally, $15,000 is a large account. That gives us some more freedom of things that we can do in terms of our trading, and especially as it relates to the advanced trading technique. Right, and then when we have multiples of 15,000, that's when we can start to talk about increasing our contracts per unit. Right, so for instance, if you had a $30,000 contract account, then you could start to trade 2 contracts as a unit. Right, just the way the math works. But we'll talk about some of that as well when we get to the large account sizes. So what to trade with a small account, right? So in my opinion, and these are things, like I said before, all of this is a discretionary kind of based system. So everybody needs to fit this to their own trading style. But in my opinion, with a smaller trading count, you should really kind of wait for trades that have hit at least the oversold, overbought 1 to 2 area for the advanced trading techniques. And then you can still defend these trades as long as you wait to do that. But there's a limit on how far you can go in defending these trades. And if you wait until it's somewhat between the overbought, oversold, overbought, 1 to 2 kind of areas, then historically, then those trades will ultimately work out without too much of a fight, right? The trend trades that we might take, right, should be based on price action based stops, right? So we're not going to try to stretch them. We're not going to, meaning that we're not going to defend them. We're just going to take, reasonably good looking trend trades, and we're going to use price action based stops, meaning that we'll put our stops a tick or two underneath the latest price pivot, and we're definitely going to try to not chase those trades. So those are still the things that we want to try to accomplish with those type of trades. Okay, what do we get to do if we have a medium-sized account? Well, in this case, we can begin our advanced trading technique if we're in the box and or around the oversold, overbought 1 line. Right, so we get to have more trades. We're going to take a few more trades because we don't necessarily have to wait until we get to the oversold bought 2 line, 1 to 2 line. Right, so we can actually take box trades. If we're hitting a floor pivot level and we're between the underneath the box line and before the over sold 1 line, for instance, we can start our trade there. And, many times those things work out. But if not, using the advanced trade technique, our next unit that we're going to enter is going to be, by definition, into the oversold area, for instance, right? So the trend trades, we're still going to use price action base stops and/or a very large box, right? And that that's usually kind of an advanced technique as well. So we may go larger than a 5-point box or something if we need to, but it'd be best to still again wait for that box area to get into the medium-sized account. And let's see what kind of flexibility we get to trade with the large account. With the large account, we can really, my recommendation would be still kind of trade it as a medium account initially, right? So we're gonna, if we have a $15,000 account, we're still going to start with 1 unit in that box area to the oversold 1, oversold 2 kind of areas. But from there, right, if we get to an area where we think it's going to bounce, either at major floor pivot type of level, or perhaps the all session low or something, maybe we're going to add more than 1 contract in that area, right? We've got the account size to do it. Right, so we're just going to add more into that area, and that does a couple of things. Obviously, it's going to drop our average down even further, right? So we're going to have a little bit better position. So we're going to be scaling into it, from that perspective, and then we can potentially let a contract run. Right, so if it's got into an extreme level, we've got multiple contracts. Maybe we have 2, maybe we have 3 or 4 or something like that. Something, still comfortable, something very, very comfortable within our $15,000, trading contract size, and we're going to get out of most of those. But if it seems as though it's bouncing, pretty hard, right, and it's on its way to maybe the other area, or at least up to our midline, we're going to get out of all of those contracts. Except for 1, right, at this point. And maybe we're going to just let 1 contract run and use the trailing stop technique. So we'll keep moving up a stop for that 1 contract we're letting run, and we'll just let it run up against the price action based stops. And sometimes those can run for 5 points, 6 points, 10 points, sometimes even more, right? So that's some of the flexibility that we can get when trading a large contracts, and we're trying to turn the large contract into an even larger account, so we can get into to multiple contracts per unit. Okay, so in summary, right? Let's treat our trading account like a business and not a hobby, and making sure we're growing our trading account, and we know what we're going to do with it when we do grow it. So therefore, we're going to use our short-term plan, and look forward to a long-term plan when this thing could potentially come an even more serious business, and you get to enjoy the benefits of some of those bigger business. Not only deductions, but perk kind of things that you can actually incorporate into an actually incorporation. And lastly, and almost foremostly, we're all in this for the success, but enjoy and share some success along the way. It can be a very profitable business for a relatively minimum time investment. We try to focus on the first couple of hours, but you could do it on a longer term basis during the day as well, as long as you're waiting for the most opportune times and staying away from the end of the day. Okay, so I hope you find this video useful. Feel free to ask questions about it in any of the support sessions, or as always, shoot me an email. Okay, have a great day, everyone, and we'll see you in the trading room soon.